Okay, well, Rana Gupta is now joining us with some perspective, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you very much. I mean, I think the last time we spoke, you were kind of alluding to the fact that at the margin, there seems to be, on the flow side, it's a bit of a negative skew, especially into emerging markets, etc. We've been looking at the daily FII number, and it's kind of now adding up to a sizable net sell number. What's the sort of overall sense when you talk to your peers from a foreign investor community perspective? What's the feedback now for a market like India?
In the short term, whatever outflows that you see, a lot of this is also going to be positioning led, because what's going on in the global and the macro market is quite unprecedented, right? Because the 10-year yield went to 4.7, 4 in no time, crude oil was 95, so on and so forth. So I think based on the volatilities, positioning wise, these flows will, correct their position, and time to time there will be outflows. But if I think about, based on, medium to long term view, we do see a lot of interest in Indian equity markets and within emerging market space. And that's largely due to the India story, which we have discussed several times, which is underpinned by the macro stability and the earning growth that's going to pick up. So I think a lot of quite a bit of money is still in the sidelines, and that's going to, I think, that declines at reasonable valuation, that money is going to come in. And I think that's been the trend. If you look at Nifty over last about 1.5 to 2 years, it kind of consolidates in a narrow band, right? It was previously consolidating between 16,500 to 18,500 between 21 and 22. Breaks out 18,500 to 20,000. Now I think it can remain in that band for some time, consolidate, before, let's say, moving up sometime, let's say, early or middle of next year.
So what do you feel about where India could head from here? I mean, you said that India is one of the most preferred markets at the moment, but we're almost sitting at, all-time highs. We're not too far away from the 20,000 mark. You think we could spend some time around these levels before the next leg up? And if yes, what's the best strategy to adopt now for retail investors?
Well, certainly we can spend some time in this 18,500 to 20,000 zone. I think we've been in this zone for some time, and we can be here for, let's say, 2 more quarters, and that's my guess, but we can spend some time here. But I think the point is that the market may look to be near all-time high, but the way to look at equity markets is to look at valuation. In fact, I would argue Indian stock market valuation is not that high relative to its own history. The market is trading at only about 5-7% higher than its own mean, which is not too high. In fact, after a while, even the large cap stocks like the autos and the banks, they're looking pretty reasonably valued considering the earning growth from which they hold out. So I think the idea will be to use this consolidation opportunity to kind of look at those sectors where you get good growth at reasonable prices. And even in the large cap space now, I think an auto and bank is now offering pretty good growth and valuation trade-off.
Hi, Rana. Good morning. Rana, I wanted to ask you about this outflows that we're seeing from FIs. It doesn't appear like it's an India-specific problem, because from emerging markets itself in the month of September, we did see outflows. You wouldn't be worried that in the near term there are some outflows then, given that sort of a backdrop?
No, that's true. I think this outflow that you're seeing is not India specific. This is more of an emerging market kind of position, kind of a thing. And when the US bond yield goes up and something happens globally, that is always an issue. The good thing is that for Indian markets, we have while the emerging market and all those funds, if outflow can happen, the good thing is that there are two sources of support in terms of liquidity flow for Indian markets. Number one has to be said about the domestic flows. We have observed that domestic flows have remained strong, and whenever the valuation kind of corrects to mean, I think the domestic flow tends to pick up quite a bit. So I think that is one factor. Secondly, if you look at all the emerging market or even the FI portfolios, I think India would be equal weight to slightly overweight, but I think our understanding is that people want to have a much higher position than that. So that money, which has to come in this quite a bit, because I mentioned earlier during this interaction, that India is one of the most preferred market, but I don't think that's adequately reflected in everyone's positioning.
All right. Okay, Rana, we leave it at that. Thanks a lot for joining in and, speaking to CNBC TV18. So India continues to be a preferred market for global investors. But